Afternoon, everybody. How's everybody doing? Let me know you can hear me in the chat. Let's make sure there's people there and that I'm working. It's always a worry. So, this morning, bit of a flat session, really. Not actually a great deal happening. We've got a nice consolidation. The only thing we got into was Aussie New Zealand, and I got into a pound yen this morning. But yeah, London's not really gone very far today. So, bit of a flat one, unfortunately, this morning. Good. All hear me clearly. That's excellent. There's a real delay on these streams, you know. I see the chat coming through like half an hour after I've said something. So if I don't get to your question very quickly, it's not me ignoring you. It's just I'm in another time zone. But anyway. So pound yen, not a lot of movement. There's not a lot of movement on anything really today. We have had some ADR hits though. So just quickly looking at the news today to start off with. Obviously, we had non-farm employment change at 1:15, 1:30 CAD building permits, and we got FOMC at 7 o'clock. So, Dixie, obviously, you can see what happened with the non-farm, basically. There was just a bit of a dip, and we are heading back down again. So, we have had some negative reaction, although the news numbers were positive. Quite substantially positive, actually. The US dollar is going down. Canadian dollar, a bit difficult to tell really what's going on with the CAD, but didn't really have much of a reaction, as you can see, to news. So nothing much has gone on with that at all. So the main news obviously was US dollar, and we are having a negative reaction to that at the moment. S&P didn't really blip, neither did the NAS. So these are flat as a pancake today, these two, as we would expect after a move like that. So not a lot really happened off the back of that news. So FOMC this evening is going to be the big one, 7 o'clock UK time. That's when we will potentially get some movement. But as I said yesterday, FOMC is a real flip of a coin. Sometimes there's nothing said and nothing of interest. Other times it's like, wow, wasn't expecting that, and the market goes crazy. So just have to play it by ear and manage positions accordingly. Luke, loving the indicator, just purchased it. Beautiful technical analysis, provided it is used correctly. Correct. It's not the indicator that makes you money, it's the person using it. About 1 minute delay. Yeah, there seems to be a very different delay in different places. I've got my web browser open in front of me with the YouTube channel open. So I can see when things are kicking off, and I'm sitting here talking away and you're still on the holding screen. That's crazy. But anyway, so don't copy my trades if we're doing any scalping. Chances are you're not going to get in on the same level as me, obviously, but I don't really scalp that fast, so it's not too much of a problem. Right, so today we'll start off with ADRs. Flat sessions, obviously, as you can see. A lot of the sessions today have been fairly flat. We have had some movers and shakers though. Looking at obviously the London session, which is the sort of orangey coloured one here. We have had some decent movement on the Aussies a little bit. Aussie CAD, big move up. CAD has been very, very choppy. So looking at the ADR dashes, basically, which is average daily range for those of you that don't know, the ADR dash is showing obviously what has moved out of its normal average daily ranges so far. So these are obviously mean reversion possibilities. We had nothing much this morning at all, but so far London session, Aussie dollar CAD has pushed up very hard. So Aussie CAD has come up into these gaps here. Looking on M5, reversal alert was off of a nice M pattern. And it's obviously retested as well, but it's just retesting. So we've kind of gone into a little bit of a consolidation on this one at the moment. But we are up at ADR highs. And Aussie dollar is a short bias, but then so is the CAD. Looking at levels on this one, this level that I had drawn in from here, which has been respected, is potentially the bounce point. So where we had this nice push down from this consolidation, we had a little flag form on this volume and consolidation here. We've pushed down, and this is the gap formed. So we've come straight up into that gap and filled it and rejected at this level of resistance. So where we are pushing up at the moment on this hourly candle, if we get bearish price action starting in New York, good possibility this one is going to turn there. So keep an eye on that one. We are retesting at the moment on M15. So if we get a close back down again below the reversal alert box, we'll get potentially a continuation to the downside and a good push down from there. But yeah, so that one's moved up potentially for an ADR reversal. Euro CAD, obviously these are CAD. We've had weak CAD ahead of the CAD news. Euro CAD's come off of the highs. That one's already come down a fair way. CAD is Euro is obviously something I always look to short at the moment. So this is a nice looking short opportunity, Euro CAD. It's only just hit ADR, and we haven't managed to get a reversal alert because of this massive push that we had. So we opened a little bit of strength in London, and then obviously we had that big spike. So this is the last sort of down candle before that move up, or the last zone really we're looking to break. We haven't managed to break it. So it's a bit too far away. When you get the reversal alert on this, it's already done a fair amount of movement, so it's not particularly good setup. But if we look at the higher time frames on this one, we are just pulling back into this area of chop from Friday and Monday, which we've broken down from. So difficult one to read this, not a particularly good opportunity. I'd like to see this one push up further, really looking up around the 24.72 range and try and get some short action back up in there. But you can see what's holding here on the 4-hour chart. We've got this big propulsion candle which caused this gap where all the buying pressure is. We've pulled back down. We've broken this one here, which did get rejected, but we're just basically bouncing off of the buy zones as we're coming down. So Euro should be weak, but personally I'd like to see it get back up a little higher up towards the 24 and then potentially look for shorts out of there. But it has hit ADR today. So average daily range obviously is as far as it potentially will go. So we'll see on that one. Euro Swiss. Right, so Euro Swiss is the short of the year, obviously. Just coming down like a steam train. We have hit ADR high. So we've put in a double bottom. Remember we looked at this one, I think it was either yesterday afternoon or this morning, as a potential for a bounce. I don't trade the euro. This is a broker candle here. Must have been this morning we were looking at it because I was talking about broker candle, which took out these lows. So we are at 125 ADR now, but if you look at where this one actually closed yesterday, which is here, this broker candle where they put the spread in of 17 pips, which is, damn it, half an ADR on this thing. This is really where we should start measuring ADR from. So when you look at this, we've moved up about 30 pips. So it's really about 100% ADR move, but it is an ADR move to the highs, and I'm looking to short this thing. So good potential short, but I don't like the fact that we are bouncing around down here at the moment. It's not really going anywhere. It's stalled. So I'd rather wait for us to pull back up into the 24. You can see with this one how we've had this really nice strong downtrend, and over the Christmas period we are really bottoming out. You can see it with the 24 moving average. We are slowing. This down move is slowing. So I've seen this with a lot of the euros, but it's probably just the Christmas period that's made this slow down. So a little bit more of a push on that one, ideally. And then potentially if we can get up with an RSI extension on that, it'd be a nice looking area for shorting. But again, not a particularly great one today. New Zealand dollar CAD, again, it's all CAD related at the moment. New Zealand dollar CAD, ADR high hit. We have just broken out of a 2-day range on this one. So if you drop down to M5, we had a nice reversal off of the 100% ADR high. and we are just retesting at the moment. So again, kind of just stalled, but we're putting in a very uneven head and shoulders pattern here. Not really very good at all. So that one, again, New Zealand dollar is a short, only just. CAD is a short. So out of these two, I think probably New Zealand dollar is going to be the stronger of the two at the moment. So it's difficult to tell what's going to happen with this one. But I just get the feeling today, ahead of FOMC, what we're just going to see is some corrections this afternoon. Everything that's happened in London just kind of getting corrected by New York, just to bring it back in line with where we opened today ahead of FOMC. And if there is going to be movement in FOMC, we'll see everything sort of kick to life there. But there's some nice rejection wicks going in at the moment on M5. So it is potentially a short, but again, not a particularly good one. And US dollar yen. This is obviously hit to the downside, and we are still dropping. So I think this one's got further to come down. As I said yesterday, looking for US dollar weakness this week, and potentially using FOMC or non-farm as the catalyst on Friday to give the US dollar a bit of a catapult. So this big propulsion candle that we had put in on Monday on the bank holiday is just getting gradually filled in. So grinding down on the US dollar. They may well get a reaction off of this area down here. So when we get back down into here, which is where we got the reversal alert on the hourly, somewhere around there is where I would be looking for some kind of reaction. So if they can just sort of grind this down over the next couple of days, that would set up beautifully for a big spring. But we'll see what happens. FOMC today could be the catalyst as well. So that's all we've had on ADRs. So the ADR on US dollar index, US dollar yen. Be looking for longs on this one, but as I say, not at the moment really. I want us to push down further, US dollar. So US dollar yen, we've had the reversal alert on this one off of ADR, and we've had 16 pips, so nearly half an ADR. So if you'd have taken that one today, yeah, you only got 13 out. It hasn't really gone anywhere, has it? So again, all the ADRs today kind of all counter trend and a little bit woolly. Nothing particularly interesting on them. We haven't had any euros hitting ADR to the upside. And the US dollar yens, I am looking to get long on US dollar. The US dollar yens. The US dollar pairs, I am looking to get long on those. US dollar yen is the only one really I'm not interested in because of the current yen weakness that we've got. So I'm just waiting to see what happens with the yen after this Christmas break. So we got this big strong push on all the yen pairs, and we've just had consolidation since then. So nothing particularly interesting there. So that's ADRs. RSI extensions, all the RSI extensions that we had yesterday and the ones that we had this morning have all petered out just because we're just basically flagging at the minute. So the only thing we've got lit up now is pound yen. And obviously that was massively lit up on the 4 hour, and we are starting the retracement. I've got my initial short position on that one, which I got into this morning. So we had the reversal alert and retested it. So I got in as we started to come down, but we haven't gone anywhere. So we are just back within the Asian range at the moment on that one. So nothing has moved. Looking at all the other yens, Aussie yen, again, we've obviously had the big strong push up. We've tapped into this resistance up here, stuck there today, haven't gone anywhere. Let's look at the hourly, it's easier to see. So yeah, not gone anywhere in London. CAD yen, again, not gone anywhere in London. We are pushing down lower. No reversal alert yet, but still no movement on these. I'm expecting an elevator shaft on these yens, some yen strengths to come through, but I don't think we're going to get it until FOMC's played out this evening. So we just have to wait and see what happens. New Zealand dollar yen, this one obviously we had a fairly decent push up on as well. We didn't get extended on the hourly on this one. On the 4 hour we did, as we did this gap fill here. And it's put in a little bit of a pullback, but it's pushing up again. We've just done another gap fill on this one. So this doesn't look too bad as a potential short, But like I said this morning on this one, it's very, very difficult to pick a support and resistance level on this. So, you can go there, which is kind of where we broke the 72 and just above this area of consolidation where we broke out. But there's no real level on this you can put a line on to say, right, well, this is a really good support and resistance level until we get all the way out there. That's the only area that's really been respected multiple times, because we had this big, strong push on the left side of the chart here. So again, drawing a line from this double top, it's not particularly strong resistance, so it's not the greatest trade in the world. But yeah, all these yens continuing to push. So again, nothing extended on the 4-hour RSIs that is particularly interesting to look at the moment. Hourlies, flat as a pancake. So just one of those sessions today, unfortunately. We had the pushes yesterday, and everything is just thinking about correcting at the moment. So everything is kind of set up. So when we were looking yesterday at the RSI extensions on the 4-hourly and the hourly, everything is kind of starting to play out now. So obviously New Zealand dollar yen, things like that. We've got these nice M patterns, and we're retesting the reversal alerts. So next breakdown is potentially when we're going to drop. So we're just waiting for everything basically at the moment, unfortunately. Nothing exciting set up. The only other thing I got into was the Aussie New Zealand trade this morning. And again, it's gone nowhere. So Aussie New Zealand, we've got this triple top high from last week, which is obviously the Christmas week. We've just come up and we've taken out any liquidity of short positions there and put in a nice reversal pattern up there. No break on the hourly yet. M15 we have. Oh no, not quite actually. M5 we have. So got my initial position on that one. Looking for basically a nice short back down into this gap. But yeah, again, nothing moved. Anybody got any other pairs they want to look at specifically, or any other things that they're in? Analysis hasn't really changed from this morning because obviously we haven't gone anywhere, so nothing much has changed. If anybody's got any questions on anything, obviously just stick it in the chat. I can answer as I go. Is Nima in here? Don't know. Somebody's asking questions in Telegram. I don't know if that's somebody that's in the stream or not. But what indicator do I use to show the average price? Average price. The break-even indicator. I think Nima's talking about there. If you are in the stream, it's just called ME break-even. I put it in the Telegram group yesterday. I can't even see it. Where's it gone? There. ME break-even line. All it does is draw a line at the average price. Still waiting for some more yen strength. Yeah, everybody's waiting for some yen strength at the minute. We are going to get it. It's just, it's starting to come in. We're starting to show on the US dollar, obviously, because US dollar is weakening. But it's just getting down to that point, the US dollar yen as well. This is the kind of potential trouble area here. We've got propulsion candle there, which has created a gap as well. So there's a lot of buying pressure in here. And it's a break of previous resistance. So looking for some yen strength, which will bring all of these yens down. They're all poised very, very nicely. There's a few of them that have had a little bit of a profit take, but the main contenders at the moment are the pound yen. I mean, that's the one that I've got into. The pound is the most exhausted out of the lot. Absolutely shot, not had a profit take on it at all. So this one's the one that's more likely to come down like a steam train. Euro yen's not too bad. It's pretty orderly as well, that one. So, don't know. But yeah, it's yens basically. We're just waiting for yen strength. And as I say, that tends to come along quite often with US dollar strength, which potentially we will be getting off the back of FOMC this evening, if not waiting until non-farm. I was reading that US dollar yen is only tradable using breakout strategy. Well, everything's really tradable using a breakout strategy. Well, I wouldn't say that. If you look at the US dollar yen, you could use a trend strategy on this. Depends what time frame you're looking at. This is the problem with all strategies. They will all work differently on different time frames. If you use time frame based charts like we are here, you could look at M5 and say, yeah, breakout strategy would work really well here, for example, but it failed. So if you went long there, put your stop under the lows, you got stopped out. Didn't work. But if you look at another time frame on the US dollar yen, like the 4 hour, and you were using a trend pullback strategy, yeah, you'd have got in there, you'd have got in there, you'd have got in there. So it's great for a trend. US dollar yen is brilliant for a trend strategy. Look, moving average pullback, but it's also good for breakouts. All strategies work on all charts, all time frames. I wouldn't say that the US dollar yen is any better to trade with any one strategy or another, but depends. Depends what you use, doesn't it? If you're using a different moving average, if you're using the 200 moving average and you're trying to do a trend pullback strategy on this, you'll never hit it. You'll never get in, will you? So it's kind of horses for courses, really. But I don't know. There are strategies which are better for mean reversion. So things like Aussie New Zealand is good for mean reversion a lot of the time and less good for trend. But the thing about any instrument as well is it changes. So, people say, oh, this is great for trading because it's really good at trending. Eventually it stops trending. Yeah, so it's no good for trending anymore. Trend trading, is it anymore? Trends always come to an end, and when a trend comes to an end, it goes into a reversal, and quite often we'll go into a consolidation or a range. So you have to adjust based on what you think is going to happen next, which nobody really knows. So hence why I use COT, because COT gives you a good indication of where the market participants are likely to want to take it. Whether it trends or gets there with a choppy range move, I don't really mind. There are certain instruments, obviously, we know that are much better to trade as trend rather than breakout. There are a lot of strategies out there. Speaking of S&P, we've got 5 minutes roughly until the open. So I'm flat at the moment on S&P and NASDAQ. So I'm looking to get into some positions today. What's everybody's thoughts on what we're going to do today after the moves we had yesterday? If we have a look at the NAS as well. So obviously yesterday I was expecting a down day after this big push, after the Santa rally. I was looking for pullbacks to MAs, so looking for a 72.24 pullback. Didn't get it on the S&P, but the NAS obviously just came down like an absolute steam train. So today we are literally chopping like crazy at the moment on the NAS. S&P, we are out into new highs. So it's difficult because these two are a bit out of sync at the moment. But the NAS has pulled back very, very nicely. So good opportunity to start scaling in for longs down here. Whereas the S&P kind of looks like it wants to go higher at the moment. We are, if you look at the price action today, we're sitting kind of up at the highs. So I'm thinking maybe longs on S&P and NAS. If we can get a pull back down to the 72, down towards ADR, looking for long opportunities down there. But just gonna let it open and play out and see what we do in the open today. We've got a long way to drop on both of these still, based on obviously the movement that we've had recently. Also read about the idea of contrarian trading, powerful indicator often being taking the opposite trade of what the herd are taking. Yeah, so that's to do with sentiment trading. So there's two different types of sentiment. Market sentiment is kind of the IG sentiment. I'm just trying to find it and show you. Where's it gone? Market opens in 2 minutes. Where's it gone? IG, there we go. So this is the IG sentiment index. So contrarian trading, as you say, it's basically just to do with market sentiment. So there is this website called dailyfx.com/sentiment-report. And this basically gives you all of the open positions for IG, which is the largest broker in the world. Retail broker, I should say. And it gives you basically all the positioning for all of them. So Aussie dollar, US dollar, everybody is bullish. So all of the IG clients at the moment, 55% of them are net long. Yeah. So Euro Swiss, for example, 77% of them are net long. Yeah. So of all of IG's clients at the moment, 77% of them are going long on Euro Swiss. Have a look at this little bit down here. 68% of retail investor accounts with IG lose money. So 68% of these guys are going to be wrong. So what do you think you should be doing? Totally the opposite of what these guys are doing. Because they're all going to be wrong, aren't they? They're retail traders. They get it wrong. They all lose money, 68%. And that's a conservative figure. It's higher than that. Euro pound. 80% of people are bearish on the pound. Yeah, so basically doing the opposite of what these guys are doing is a good idea. And you can see what happens on this chart here. So this is the sentiment index, this line here that you see on the chart. And this is obviously the actual chart of price. And as you can see, every time sentiment goes long, the market goes short. Then sentiment goes, oh, actually, we're all going to go short. So the market goes long. And that's what the market does, doesn't it? It comes around and hoovers up your stops and takes your money. So this is basically how it works. But this bit down here is the bit that you're interested in. These squiggly lines. These are updated every 4 hours. And these tell you what the current shift is in market participants. So here, for example, on Aussie dollar, US dollar, this morning at 8 o'clock update, was it? 12 o'clock update. We just had the update 2.5 hours ago. Everybody was exiting their longs and going short. So what probably happened today with the Aussie dollar, US dollar is totally the opposite to that. So if everybody is going short, chances are that will have gone up. So let's have a look at Aussie dollar, US dollar. What's it done in London? Yeah, because the entire market went short. So all the banks who had to go and fill their orders had to go long to go and grab all these stops from all these guys that were going short to power up their positions to take it short. When the market goes, oh, actually, no, we'll go short, we'll go long, which is what they will do now because everybody in retail tries to chase price, the market will turn around and go the other way to grab their stops. That's what powers the market. Yeah. So this bit here, the angles here are the interesting bit. This is what's happened recently. So here, for example, everybody is exiting their longs and piling in short on the Germany 40. Yeah. So that's basically how it works. Oh yeah, just Germany 40. That's changed, isn't it? It was Germany 30. Yeah. So that's basically what that is, contrarian trading, if you like. It's just opposite sentiment. That's really all you need to do. Wow, NAS is coming down hard. Okay, so market's open. So COT basically, commitment of traders is long-term futures contracts. Contrarian trading or sentiment-based trading is looking at what the crowd are doing and going the opposite way. So yeah, I mean, it works, but the problem with that is there is no time frame. Again, it's another thing that you cannot signal on. So it gives you a directional bias for that session, but it doesn't tell you when to get in the market. So what a lot of people do, and what I have done in the past, is use that sentiment index and look at it every 4 hours when it's updated and see what the market crowd have been doing, what the retail have been doing, and then basically just hitting the opposite button and then getting out at the end of that session. You take whatever the market gives you during that session. Yeah, it's a very powerful thing. But that's the bit that you're interested in. Where is it? Let's look at that one we just looked at, the US dollar CAD. No, Aussie dollar US dollar, wasn't it? Yeah. So let me zoom in if I can on this. Yeah. Yeah, so this bit here, this is all you're interested in. Yeah, this is updated every 4 hours. So this is a 4-hour chart of sentiment. What you're interested in is the last update. So this last bit, the last dots there, did they both go in opposite directions? If they did, you do the opposite. So everybody was increasing their selling positions and exiting their long positions. Yeah, which means the market is going short. So what do? Go long. And that's exactly what happened with the Aussie dollar US dollar. Yeah. So all you do is you come to this website every 4 hours and you look for whatever's changed. What's changed? So here, they're both going up. Doesn't tell you anything. You're looking for the opposites. So if one's going up and one's going down like that, that is a good one to trade. Germany 40. Yeah. But I used to trade like this ages ago and it was really good. But you find the problem with it is you come in and there's loads of days where you'll come in and there won't be any positions. There's nothing to trade. So you sit there and you go, I'm going to trade something else. And that leads to over trading. So it's good, but as a part of your arsenal. If you're looking to get in short on something, go and have a look at what the retail crowd's up to. If they're all long, it's a good indicator you should hit the button. That's the way to use it. Okay, so big sell-off at the open on S&P and NAS. Again, NAS is really going for it. Look. Almost want to go out to a bigger time frame on these. Big sell-offs at the open. So NAS has made new lows. S&P is coming down to challenge Asian session and yesterday's low. Speaking of futures, out of curiosity, did you abandon Apex trading or still trading outside? Yeah, no, still trading Apex. Not as much. I got funded by Apex, but it was before Christmas, and I kind of didn't do an awful lot with it once I got the account. And I'm developing a Renko strategy at the moment to start doing more intraday stuff. So what I do with my my normal position trading on indices, which is what I really trade on futures, is kind of multi-day holds. So I'm either out the same day or I'm holding overnight and adding to the position to scale out when the move starts. The problem with obviously futures is you've got to be out by end of day so that strategy doesn't work. So I'm looking at a stop loss strategy to use. Basically, I passed using the strategy that I'm trading here, which is propulsion gaps. So there you go. I would have got in long on the futures contract there, and I would be out of it now with probably $300 in the bank. So that's the strategy that I passed with. But that isn't what I want to do long term with it. I want to develop a strategy that's more stop loss based and more long term, if you like, intraday. So Renko is something I'm looking at. But yeah, I will probably do some more trading of that Apex account in here. But it's just over Christmas. There's just no point doing anything with it. It's gambling. So, but yeah, it's weird. I'm sitting on all that money and not using it. It's 100k account I got funded with. But I will start doing some more. But I like using my own money more, to be honest. Jason, by the way, I have bought your ADR indicator and breakout retest indicator. Really love it. Good job. Good. Glad you're finding it useful. US dollar yen looks very much short over there, and it scares me. Yeah, I remember you did. Still going on. Yeah. You're talking about IG, US dollar yen. Just wait for the market to settle down after the open, see what the opening ranges are. US dollar yen. There we go. Yeah, so but they're all short. This is the thing. Yeah, the whole market at the moment is short. Yeah, they're all short on US dollar yen. 23% are net long. Yeah, so that's 70. It's just maths. 76-ish percent are short. Yeah, so the whole market is short. So what do you think they're going to do with the US dollar yen? They're just going to keep taking it up because everybody that's getting in short is all putting their stops up there. So the market's going to go up and grab it all. And then when it's got enough, it'll then do that as soon as they flip. So keep your eye on this. Yeah. Wait for this to happen. Yeah. So wait for everybody to start exiting their shorts. Yeah. And then entering their longs. As soon as everybody exits their shorts, i.e. bails and takes a loss, the market will flip. Yeah. This is starting to come down, look. But that needs to go. They need to flip it, basically. But it will happen. It will happen. Yeah, so nobody's long on this thing. It's going to come down. 68% is a very conservative estimate of people that lose money. There's a lot more people lose money, I think, than that. So, right, let's get back to the S&P. Okay, so we just entered that buy zone, which has been held in the S&P. NAS has taken out yesterday's low and is rejecting. Could be an up day today. There's a very high probability of gap fills on the NAS. Not up there really, but definitely gap fills towards there today. So might be a good time to start looking at long positions on that. Certainly seems to want to long today. A nice flush. So we're just back to average here for the day at the moment. So obviously all the volume's been in here today. We're just coming back to where we started. So all the market's done literally is flush out those stops at the lows. Euro Swiss has just hit 150 ADR. That's a good short, that. Yeah, usually here around 90% of people lose money. Yeah, I mean, in my experience, I've been doing this a long time. Not full-time trading, but I've been trading for 13 years. And when I think about the amount of people that I have met along the way, amount of gurus that I've followed along the way, and mentors that I've had along the way that have disappeared, and friends I've had trading various different strategies and things over the years, all disappeared. I'd say it's more like 99% of people fail. Unfortunately, it's a very, 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 very difficult job. I liken it with fighter pilot, doctor, that sort of level, surgeon, I should say. Think Doctor Strange, that level of surgery, where you're earning like £250,000 driving Lamborghinis. It's that hard. And people don't realise you've got to put in years and years and years of chart time before it suddenly starts to make sense. And you suddenly get, something clicks one day, and it just works. But obviously there's a lot of people with IG that are making money. But what the IG sentiment data doesn't tell you is how much of that is hedged money as well. So you might find that there's 23% of people are net long, but that 23% might be a huge hedge from a couple of customers, you know. So it's difficult to tell, but not really going anywhere at the moment. Let's look at what the M5 opening ranges. So just pushed up and retested where we opened on the NAS, which seems to be holding at the minute. It's looking bearish to me at the minute. We've got big long wicks here, rejecting. We did put a little flush in on the S&P as well when we opened. We came up, just took any liquidity here before flushing down. And obviously we just hit these buyers, which is rejected, but these wicks are looking pretty bearish at the minute. Someone was in here yesterday shorting the NAS on that big flush we had yesterday, which was good. So if you were shorting that, well done. But I just don't short these indices. Always looking for long opportunities, basically. Because if I do need to hold them, I don't want to be holding shorts. Because obviously this thing goes up. I say it goes up. What goes up must come down. Bitcoin being a prime example. But typically, the 500 biggest companies pretty much in the world are more likely to go up than down, aren't they? The top 100 tech stocks. If you want to do some experiments on the IG Client Sentiment Index, it's worthwhile doing a bit of investigating. I'll put a link in the chat there. Go and have a look at what it is. You know, you check in at every 4 hours. You can check in. It's updated at the top of the page when the data is updated. But just go and see what happens to the market. It gives you a really good indication of how the market works and why the market works. Yeah, the market is just moving around looking for liquidity all the time. So obviously that is generated 90% of the time by retail traders. Every time we take a short, we put a stop, and the market goes and takes that liquidity to power itself up, to power the moves. So it makes 100% sense that whatever the retail crowd is doing, the market will do the opposite. So if you see a continued strong push in one direction, and then all the sentiment for the market change in the other direction, what's the market going to do? Go the other way. It's already been powered up. So it's worth looking at, but don't use it as don't try and develop a system out of it. It's literally as simple as do the opposite. Okay, we are getting a bit trapped at the Asian low here. It looks like it's rejecting. It looks like it wants to go short again today. Especially the S&P. The S&P is well overdue a drop after this big Santa rally we had. So it's really tempting to short it, but trouble is you get stuck in a consolidation. So here, for example, if you'd have gone short here, expecting this pullback before the next push, you're stuck, and you tend to get stuck and you stay stuck, which is why I don't like shorting it. But if you're long in it, expecting this to be the bottom before the next push, you know 90% plus sure that that is going to happen, because that's what this does, which is why I don't like shorting it. Just from a stability point of view, the odds are in your favor if you hit the long button. If you hit the short button, they're not, are they? So that's the only reason I don't like shorting it. But sometimes, unfortunately, that means you have to sit here and wait for the shorts to play out. It's sod's law. When you hit that short button, that will be the day that it goes and it pushes, and then you're stuck. If you're using a stop loss, it doesn't really matter. So if you want to do stop loss trading, it's not a problem taking a short if you're going to use a stop. Because you're going to be out. But if you're position trading, you don't want to get stuck the wrong side of it. No matter how bearish it looks, it always seems to look bullish at the same time, doesn't it? It's wicks. Let's have a quick look at what the rest of the market's up to. Dixie's still coming down. Just coming into ADR on that now. Euro Swiss, we had an ADR 125 hit, didn't we? 150 rather. So yeah, another big push up, Euro Swiss. We're coming back up into this nice area of consolidation from the Asian range yesterday. Still want a little bit higher. Got another 20, 30 pips to go on that, back up to the 24. If we do get up to the 24, I'd be interested in taking a short. I might just stick a little alert up there. Somewhere around there. Just chop at the minute. Could be a shallow pullback on this, you know, just taking the liquidity before they run from here. Trouble is, it just does not look that way on the S&P. Just haven't pulled back yet. Does look like it wants to push higher though. Okay, I'm going to take a chance on this one today, I think. If we get a reversal alert here, I'm just going to take a small long. New Zealand dollar Swiss has also hit ADR. Yeah, it looks like we're pushing. We've got 3 minutes left on this candle. See if we can get a reversal alert on this. Thinking behind this is that they're going to want to come back up into these areas potentially and drop from there. So obviously there's a lot of selling pressure came in yesterday. May want to come up and retest this before dropping it further. Or obviously this is just a 38 retracement on this move. So we're just having a shallow pullback off of the 24 moving average, and we're just going to go from here. So let's see if we get an alert. Do you think long stops on the Nasdaq are taken out before a brief pump up? Yeah, I mean that's the idea. This sweep. Anybody that's a lot of people will play the fade on big moves like this, me included. So when you see a big dump like this, you tend to get a fade back up into it, and quite often we'll return to origin, return to source up here, and then dump. So anybody that called the bottom here and longed it, and anybody today that has seen these two sessions bottom out, quite possibly has gone long. And obviously they will all have liquidity under there, all their stops will be there. So they've just run those stops, grab that liquidity. So the play will be to do exactly what we were expecting to do, fade it back up into these gaps. So one of these will be strong sellers, which will likely push price back down again. But they've just taken out liquidity first before they do the run. But I want to see a reversal alert. I want to see confirmation of that. I want to see new highs putting up here, before taking that. This whole game, if you like, of trading is about jumping on the train at the right time. You have no control over where the market is going. No one has control over anything in this. And as soon as you understand that, it all starts to fall into place. Your job is to get on the train and ride the train and get off the train. That's your job as a trader. You put risk on the train and hope it stops at the next station, and that next station is profitable. That's all you can literally do as a trader. So you have to look at and think and predict what these guys are doing, what they want to do. So when they've been through an accumulation, they're going to want to move the market in one direction or the other. We don't know which one because we haven't got their book. We don't know how their book's balanced and where they need to take it. But we can see patterns that they regularly do. So we know that they go to grab additional liquidity before moving the market. And that is provided by us. So when they do things like this, You need to wait for candles to close and wait for things to actually happen before you get into positions. But we also know that they move to where you think it's going to go, and then they pull back from it. So they do things like that, which is why the reversal alert indicator is there. We do not trade until we get a closed candle above there. They have confirmed that they're moving above. At the moment, they've teased us and said, yeah, we might do, but they haven't. And a lot of people will go, oh yeah, I'm going to jump in here because yes, it's definitely going that way. And then within 10 seconds before the end of that candle, they'll pull it back and go, ha. And it's all a game to them. All they're doing is literally moving the market up and down, gathering people's stops and pending orders until they've got a book which is balanced enough for them to take it in one direction or the other and make money. And this is what they're doing at the moment. Now, they may have got enough down there to make a move. If they haven't, they will accumulate until they have, and then they will move. But we don't know which way. So this is where market structure comes into it. We just follow the highs and the lows. So when they make a new high and they pull down and make a higher low, we assume, rightly or wrongly, is going to be another higher high coming. We don't know because we're not them. We don't know whether they've made enough money yet or not. But this is part of it. You're sitting on your hands. Like I said yesterday, not being in a position is a position. Being flat is a position. At the moment, I don't know which way this is going. I've got no idea. So I'm not going to take a trade. But to me, today, based on this price action at the moment on the NAS, it looks long. So 228.80, 215. So it's whether or not you take the 5-minute break of structure or we wait for the 15-minute. But 1 minute left on this candle. Doesn't look like it's going to give us an alert. S&P is certainly not looking heavy. Massive wicks. It's all wicks to the upside on the S&P. All rejection. Support rectangle is holding. It's trying really hard though. We are probably going to get it. Look at these wicks though. It's just chop. So much chop. No. So that's 5-minute candle closed. Still no reversal of that. No, it looks like it wants to go. Let's see what happens in the next one. Pound New Zealand has just hit ADR as well, and New Zealand dollar Swiss. Oh. That's just chop. New Zealand dollar Swiss. That New Zealand dollar Swiss though, obviously it is just chop. I mean, you see the wicks. It's a horrible, horrible wicky thing to trade this. If you're using stop losses on this, it's just death by 1,000 cuts. But saying that, we are obviously in a down channel, pulling to the upside. So there's obviously some Swiss franc weakness coming through at the moment because we've got the New Zealand dollar Swiss and the Euro Swiss both pushing. So this is Swiss franc weakness, and the Swiss franc will power up at some point, which is why you get these big, strong sort of down moves. And it's usually, obviously, the Swiss franc is stronger than most when we get some price action in there. We're up at highs. You've got really easy levels to trade on this. So
where we are right now is roughly where these highs are. Failing that, Euro US dollar just hit ADR as well. We got level there. We got level there. So if you get in with a short now, nice bearish price action going in. Actually, M15 is probably, yeah, nice shooting star gain on M15 at these highs. They're just taking out the Asian highs at the minute. So if you get in here, backup plan for additional positions at 150, 175 ADR, roughly around those areas. So if it continues to push up to there, just get out on a pullback. Pound New Zealand hit to the downside. Let's a quick look at that Euro Swiss, because that still pushing at the moment. So hopefully that'll continue up. Okay, we're looking like we've hit some more selling pressure here on the NAS, but we are getting a reversal alert on it. But big old rejection wick. It's really wicky today. S&P's not interested. Look at these wicks to the upside here. This level here. $47.82. Just not interested. And the NAS is pulling down hard as well. This is why you wait for candle close, people. One minute left on this 5 minute. Yeah. Looks like a short to me today. Just struggling to get anywhere at the moment. But we have just pulled up. So basically, NAS has now pulled down, taken liquidity. The buyers have tried to run with it. They've been hit by all this chop, this area of balance here. There's obviously way more selling pressure in here. If you look at this on a market profile, you'll see like a big chunk here and a little bit like that. So this is obviously the point of control. We've tried to get through the point of control for the day and failing. So it looks like it's getting rejected. So potentially another short day, which I'm not really interested in. Let's have a look at potential levels that I am interested in. I'm not really interested in too many for the NAS, to be honest. But so somewhere around here, the 72 moving average. So I'm just going to put some pending orders in the market. So there. Top of this gap here. So we had a gap formed here. Yeah, which is this one here. So if we get a pull back down to there, by the time we get there, we'll be pulling back up with the 72. So that's a really nice area. So 125, 150 ADR today, if we can get a pull back down to there. We got this one down candle all in his own here, which was kind of that flag. Nice little area balance. A lot of volume came in here and the buyers won out. So somewhere around there is potentially a good level as well, around the 61.8 retracement, but it's really close to the other level that I'd be interested in, which is more this propulsion candle. Other than that, price action really is kind of there. Everything else has been bullish on the Santa rally, and there's nothing else to the left that's really of any interest at all. So we've got this level here that keeps rejecting. here, which we again have just swept today. So, you know, from a directional bias point of view, it's really, really difficult to pick a direction from where we are at the moment. It could go either way really easily. So, really, play on this would be buy order, buy stop above the highs on this 4-hour move that we've had here. So this candle that we're putting in now, if we break the highs here, there's a good chance we're going to push up and we're going to come back up into this selling pressure from yesterday. So that would be my play at the moment today. Breaking the Asian high, London high basically, just breaking the London high. If it does that, there's a good chance we're going up there. If it doesn't, we're coming down, and those areas are just highlighted really is where I think we're going to come down to. So down there, just above this candle here, I would have another pending, and then if we get down to this level here, we're going to be down at the 72. So pending down there. But at the moment, we go nowhere. Stuck. And for the S&P, I'm interested in this level here. So this move we had before we went into the consolidation. So there's a lot of volume in here, which will be buying volume because we pushed out of that area. So this little consolidation there. Prior to that, we've got this little consolidation here after this big propulsion candle. So down here, another good area I'll be interested in. So we've got a lot of buying pressure built up in there. This is the accumulation. Yeah, so this is the volume accumulation, profit, volume accumulation, profit, volume accumulation. Yeah, so this is what I was talking about with them grabbing liquidity. That's what they're doing in these areas. Potentially there, but more there. And obviously every time we get those propulsion moves out, we're getting our gaps, propulsion gaps put into place, which is what we would expect to get tested. And one of these buyers zones here will hold. Unlikely it's going to come all the way back down there, but I mean, if it did, obviously that would be another area to get in. But you know, you're not going to make it down there. Very unlikely to make it down there. But I don't really want to put a pending order of above the highs here. If we do get a move up today on the S&P, I can't see it going far before it comes back down again. It's not really enough reward for me to get in there. I'd rather see it break to the downside. And I'd have to have that sell stop on there with a stop loss, because I hate shorting. Maybe that's my new rule. Maybe that can be my 2022 New Year's resolution. If I'm going to short it, I'll allow myself to short it, but I've got to use a stop. You just see that chopping my account to pieces though. Got hurt many times for not waiting for a candle to close. Yeah. Still do sometimes and usually pay the price. Yeah. Always wait for a candle to close. One of my mentors from many, many, many years ago, when I first started trading Forex, it's one of the first rules, because I never used to wait for a candle to close. So whatever time frame you're looking at, just never used to wait for a candle close. And that's the first thing he drummed into me. And that instantly made a difference, because every signal I was preempting a bullish engulfing rather than waiting for a bullish engulfing. If you preempt a candlestick pattern, it's not going to happen, is it? As you can see, yeah, this is our support rectangle. Could have preempted it there. Yeah, you've had 5 attempts. If you were preempting a reversal alert here to go long, you've had 5 times you got that wrong. If you wait for the candle to close and confirm, even if it closes up here, yeah, you're going to lose that much, but you've got confirmation of a bullish price action. Yeah, we're going with the market. The market goes bullish, we go with it. We don't assume the market is going to go bullish at some time. Of course it's going to go bullish at some time, but we don't know when, do we? Wait for it to show you. So the whole purpose of the reversal alert indicator is to show you confirmed market structure changing. Yeah, so here it had a go at changing, but here it actually did change. What a dull session. Really not getting out anywhere, are we? Euro Swiss at the moment is the mover of the day. Still pushing above 150, looking for a 175 ADR. Let's have a look at what the other euros are doing today. So yeah, Euro CAD's had a good session. Odds gone nowhere. Pounds had a good session. Beautiful shooting star going in at the moment on Euro Pound. This bullish pound at the minute. So yeah, Pound New Zealand's just come straight off of ADR. What else we got? Pound New Zealand. Any other pounds? No. So bullish pound. So Euro Pound looking like a nice short. For those of you who are not familiar with the market reversal alert indicator, obviously when we get a break in market structure, the indicator will start to draw in potential support. So obviously it will keep drawing rectangles as support until one of those rectangles gets broken, and then it gets coloured, and that is a potential market structure shift, which potentially will get retested before a new low is put in. So there's your high, low, lower high, lower low M pattern. Yeah, so that's what it's doing. So as you can see here, if you were going to take a preemptive short here, assuming that, yeah, we're going to get some selling pressure coming in, this could be a very nice TP. We're assuming that we're going to bounce out of there. EA just closed Euro Swiss. Nice one. Good job. So S&P still sideways. Okay, so the NAS is coming down now. I say coming down. We've got the trouble with these big opening moves. You get put in at the open. This opening 5-minute sort of range. When you get these big ranges, we're quite often looking for a range break. So where we have an opening range, either of a session, an opening candle like this. Whenever you get an opening range of some kind, you're waiting for a break and a retest to enter a lot of the time. So obviously this is kind of like a lot of people play the London breakout. And this is kind of the play. When you've got such a massive range like this, you've got such a long way to go to break it before you can get into a position. Quite often by then, you don't have far to go until you're going to meet the average daily range of the instrument, which is typically where it starts to slow down and stop and stall. So when you've got a big opening candle like this, you've got to either take a chance up here and take a short and hope that you are going to get that break. But a lot of the time we'll go into a kind of a balance day, an accumulation day, where we don't go anywhere. You can see we've had accumulation day so far on the S&P or on the NAS. And when they happen, they're just really hard to trade. And you quite often find you get these big moves and we just get stuck in them for the day. But there's nothing you can do. You're at the beck and call of the market. So but certainly looking like a short day to me at the moment. So if you wanted to play a short on this now, assuming that on the NAS, for example, we are going to break today. The short's going to be here and stop. Assume that that is the liquidity run. Those sellers won out, push the price back down, getting short, stop there. And TP as far as you can go, really. Just protect the position. Should you do it? Let's do it. So looking for areas where we've had buyers coming through, which is where I'm looking to buy really a lot of the time. So if we're going to break today's low and sell off, we should get, I mean, yesterday was an unexpected day. There's 200, nearly 200, 175 was it yesterday? 175 ADR. Big day yesterday. Don't usually get days that big. You can see typically normal ranges are sort of, well, you can see 2,500 pips on NAS. So from where we are at the moment, where we've put in highs today, this is ADR. So somewhere before ADR is the obvious place to take profit. And assuming that we are just going to put in roughly an ADR before we either go into a consolidation or go into a pullback. That's the same for all pairs, all instruments, which is what the ADR reversal trades are. S&P's really stuck ranging at the minute. Lovely bearish wicks though. It's like wick after wick after wick. Just bearish, bearish, bearish. Buyers are just not able to get anywhere. We're kind of contracting at the minute. So potential for an explosion. So US dollar is still selling off at the minute. So US dollar yen stuck. So we have got, yeah, more yen weakness by the looks of things. Yeah, still pushing all these yens. Although they are looking a little tired now. Apart from the euro. Whoa. Euro yen is looking really tasty for a short. I'm on the pound yen, so I'm not going to take euro as well. But with euro weakness, as soon as we get some movement on the yen, any kind of yen strength starts to come through, this is going to come down hard because obviously the euro's got nothing to fight back with at the moment. It's neutral currency, so it's just sitting there getting battered about by all the other currencies at the moment. As you can see here, whatever goes on with the other currency, i.e. the US dollar coming down, the euro will do the opposite. So when the yen does power up, we're going to get some seriously big candles to the downside on this. We got that level we're approaching at the minute. We were shy of it by 13 pips, this support area up here. So this is a really nice support, which should turn resistance. So somewhere around there, it's worth dropping down. Just looking if we can get a sweep of yesterday's high somewhere up there, get a reversal alert up there. That'll be a really nice short. Okay, S&P's pushing now. I assume NAS is also pushing. I'm still struggling. Stuck in a range. What do we think, guys? Are we going up today or down today? Difficult to call on it today. So if this short doesn't work out, I'm going to get in with my buy stop. So as I say, one or two things is likely to happen today. We're either going to dump further and get ready to power up for the next long move, or we have hit the 38 retracement, and this is where the market's happy to just power up and go. In which case, obviously, I'll just get in that long and get out just before we get to this candle before the big dump. So I'll lose 20 on the 20 on the short and make 46 on the long. Assuming the market obviously does bother to move today and we don't just sit in a range all day, which is highly likely after a move like that yesterday off the NAS. But hey. Evil Janky started down, recovered it, and now halfway down again. Yeah. This is why I don't trade tiny time frames. A lot of people scalp on when they, especially when you're trading futures, obviously. A lot of people scalp really low time frames, M1, M2, or tick data, range bars, that sort of stuff. And it's it's great. I passed my my funded account with Apex scalping, but the problem with it is you get beaten up so much as a trader when you're doing that. You'll be up, and then all of a sudden you'll dump and you'll want to get that money back, and it causes massive emotional problems trying to scalp. Whereas longer time frame trading, and if you're not using a stop, or you're using really, really wide stops, so using very, very, very low lot sizing, the emotions are taken out of it completely, which is the best way to get over emotions. 90% of traders, I think, from my experience anyway, that I've met, are killed by their emotions, not by their ability to trade or the system or the strategy they're using. They're killed because they get cross and they revenge trade. And as soon as that starts, it's a downward spiral. So if you take that part of it out and remove 90% of the emotion, you don't get revenge trading. You don't overtrade. And scalping, when you're on 1 minute time frames, you're trying to grab, like 0.25% moves and 10, 20 pips, that sort of stuff. It goes wrong 10 times. That's it. You're done. And that's why everybody blows the accounts, and that's why the prop firms are making so much money. And that's why, these prop firms, they're great. So I'm funded with Apex, but I'm funded with 100k with my arms tied behind my back, because at some point I will probably blow that account. Because I cannot sustain, no professional trader can sustain an account without having a losing run. I have losing runs. Everybody has losing runs. Best traders in the world have losing runs. Yeah. And the prop firms know that. So they put into place rules to make sure that at some point soon, you will hit that losing run and that account will be blown. That 5% drawdown that you only use 2% of in your 2-stage evaluation, absolutely brilliant. As soon as you get the funded account, bang, you go into 4% drawdown, you panic, you close it. And now you've got to get that money back. So what do? Double your lot size. What happens next trade? It goes against you. That's it, gone. So that 3 weeks or 4 weeks of amazing trading you did is blown just because of the rules. Nothing to do with your ability as a trader. It's the rules that kill you. And it's the emotions that kill you, not the trading strategy, the trading system. Yeah. So if I'm getting in here and I'm seeing this nice bearish pattern and I hit the sell button now and it pops down to there and then it pops back up and it stops me out, the amount of risk I will put on there, 0.5%, 1%, is going to lose me so much money. Whereas if I just get in with a tiny position here, short, and then I get in with a tiny one there and a tiny one there, I know at some point this thing's going to do that, because that's what it does all the time. Buyers turn into sellers. Yeah, that's all I'm doing, is riding those waves with very, very small amounts of money. And I have no emotional attachment whatsoever to it. You notice I haven't got a clue what's going on with the Aussie dollar New Zealand trade. I mean, I don't care, because it's a 0.2. It's not gone anywhere. What's my pound yen doing? I mean, a micro drawdown of like 0.41% of my account. And look at that, 0.28% of that is on this NAS trade. But I don't care, because it's a small amount. When you are, every time this ticks and it's costing you $10 or $20, that's when you start to get emotionally destroyed. That's where everybody goes wrong. Everybody's trying to make 100% a month. If you try and make 10% a month, you'll do it no problem at all. But when you get that wave, when you hit that sell button on that M1 and it runs down to there and you get out and you've made a profitable trade, and you do that 4 times in a day and you do that 3 days in a row, it's that level of euphoria that makes you go, I've cracked it, and double your account size, and double your lot size rather. And that's when it goes wrong. It's called walking on water. We get to a point where we become competent and consistently profitable traders, and then we go, right, time to make some money. That's the point everybody blows it, and you have to go back to step 2 or step 1 for a lot of people. Unfortunately, it's the name of the game. And the markets know this. This is why they chop us around. This is why you get these big wicks. Yeah? Everybody jumped in short here. It was like, wow, look at that lovely 3-bar reversal. Look at that rejection. We'll jump in short. They jumped in short. What do? Come up and they took their stops out. All this chop is accumulating everybody's stops, everybody's positions. They're just accumulating all the people trading the chop, waiting for the move. And the move is what they did yesterday. That's the move. That's the accumulation. That's the move. That's what they do. At the moment, they're accumulating. Still accumulating. If you're trading anything below M5, M15, you are literally just trading chop. Complete chop. Yeah, Evil's just said, and now I'm trying to open small sizes with a wide stop loss and trying to basket trade, adding some more positions along the way. Yeah. If you're position trading, your lot size is tiny. Insignificant. It's got to be insignificant, and this is where people go wrong. And this is what I talk about in the position trading course on YouTube, in the Boocamp. It's everybody goes wrong by going in with normal lot sizing, big lot sizing, and they try to position trade with 0.5% risk, and that's where it goes wrong. Tiny. You shouldn't care. You should be able to go to something like Euro Swiss, yeah, should be able to go to Euro Swiss now and go, right, that looks like a good trade. I'll go short on that. Don't care. Don't care. If that goes up, what's the worst case that's going to happen? If it and when it goes down, I'll make money. If I make a small amount of money, what have I done? I've made money. What's my job? Making money. Obviously, this is a tiny little 3K account. On a bigger account, like my 30K account, yeah, or a 100K account with Apex, yeah, I'm trading bigger positions. But those positions are still sized that I don't care. If I hit a 0.15 short on my 30K account, I don't care. Because worst case scenario, it's probably going to go maybe tomorrow I might be £50, £70 in drawdown. It's nothing compared to the balance. And that's what it's about, keeping your sizing of your positions when you're position trading small so that you don't care. You know, everybody would have hit a 1% short on that Euro Swiss now, be panicking about that. If that pushes up to 175 ADR today, everyone would be going, oh my God. It doesn't matter, I don't care. Because it's gone up so much today, it's going to come down at some point. There's going to be a profit take on it. And if it doesn't come down today, it's going to come down at some point in the next few days. And if it pushes all the way up to here, where my arrow is, my alert is, it's going to be hitting the 24 moving average. Yeah, this thing loves the 24. But yeah, keep it small. Keep it small, make yourself consistently profitable. Then have a look at increasing your lot size. Get used to trading. Get timing on the charts. Again, harping on about my mentors and people that have taught me in the past, but guy that I used to trade with, he wouldn't entertain me until I put 1,000 hours in front of the charts. Yeah. You know, that's what you need. You need people talk about muscle memory. It is a thing in trading, muscle memory. You see things, you see patterns, and these patterns are not your cup and handles and your head and shoulders. They're price action patterns. You see things happening, 3-bar reversals. I can spot them as they're forming because you just see them over and over again, and that's what you've got to do. You've got to spend a lot of time in front of these things, and the only way you will survive spending 1,000 hours in front of charts is by trading with tiny little things that do not matter to you whatsoever. And you will make money doing that. And if you only make 5% a month, so be it. It's better than 95% of the people, isn't it? 10 to 15% is what I make on average a month. But I make 10 to 15% a month. That's the difference. Yeah, P&L, this thing's got to be green. That's the goal. Green P&L. Okay, S&P is rejecting off of the London highs. So we have got the reversal alert there. So we're now retesting. NAS is coming down nicely. Maybe my New Year's resolution then of trading short on the NAS and the S&P, maybe that is the way forward. God, I hate going short on these things. You just know, I've just seen it explode so many times to the upside. It's just so worrying being short on something that literally is engineered to go up. It just feels completely alien. But hey. Maybe we should start looking at oil as well. Not gold. Not touching gold. Oil gets really good movement during the New York session as well. But obviously nowhere near as consistent. And oil has a trend as well. So when you get with oil, oil is a trender, as you can see, but it's more erratic. So there is a lot more opportunity to short it because it goes into kind of fairly long periods of consolidation, like that whole area there. So there's quite a lot of that goes on in oil, which obviously you can play the ups and downs and chop around in. But kind of stick to the stuff that you... it's all about creating an edge. And if your edge is that you can see that this thing just goes in one direction, that's an edge. Yeah, Evil just said, you might be too conservative. Yeah, getting in too conservative is better than getting in too big. If you're getting too conservative, the worst case scenario is you make less money. But the thing to take away from that is you make less money. You're making money. If you're getting too big, you blow your account. If you make less money, you're still making money. It's the big difference. Using one micro with an Apex 50k evaluation and a wide stop with 0.02 on Forex and no stop. Yeah. So keep it. If you guys want to do futures evaluations like I did with Apex, start with micros. Don't go straight in with. If you're going to trade S&P and especially Nasdaq, do not get in with one lot, one contract on Nasdaq. S&P, you're talking $12.50 a tick on the S&P, and it will move very, 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 very quick. Nasdaq moves way, way, way faster. So if you get in with micros and with a wide stop or no stop, there's an argument for also trading without a stop on Nasdaq and S&P. Your stop is time based, isn't it? So if you're trading futures, you've got to be out by the end of the day. So if you are, like we're thinking here, we're going short. So if we take a short here, we take a short here, we take a short here, for example, and the thing keeps pushing short, 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 we know we're going to get an end of day sell off on it. We always do. Towards the end of the day, you will tend to get a reversal move on whatever the direction of the day has been. Look at yesterday. Yeah, so this was obviously a small one because of the extent of the move, but you get an end of day sell off most of the time. Yeah, so we've got a tiny one there, but it's a sell off. So you could get in short, yeah, and all you do is you get out at the end of the day. So you do time-based trading rather than using a stop and getting cut 1,000 times up and down, trying to do it. Pick a direction for the day. Yeah, use a higher time frame to pick a direction for the day. If you said every day you were going to go long on the NAS, yeah, you would have a losing streak of 3 or 5 days. But what you would also have is many, 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 many more winning streaks, winning days. Yeah. So if you just said, I'm going to get in, if London pushes down out of Asia, I'm going to get in long. I think if you exited towards the end of the day in the New York session, you would probably make money. It's one to test, isn't it? But that will also stop that mentality. Yeah, if you get in with 3 micro lots or 4 micro lots during the day without a stop, you're not going to blow the account because the lot sizing is not going to be big enough to blow the account. But what you will find is your psychology will completely change. Your way of trading will completely change. And you'll become profitable. Either that or you'll become break-even. And that's the big step. That's the first step I made. Becoming a break-even trader was the big one. Going 3 months without losing money, that was it for me. It was like, right, cracked it. And these things are what did that for me. These 2 moving averages. Using the H4. Again, using these guys, if it's green, you only take longs. If it's red, you only take shorts. If you were to just do that, you've massively increased your chances of winning. But if you use a stop, you are still going to get it wrong a load of the time. But if you don't use a stop and you have another filter like this for getting in long, you will get out when you're right. The market will make you right because the market does that. Which is why I don't do this, what I'm doing today. Because it scares me. But anyway. Social experiment. Okay, so we've just had a nice big sell-off on the NAS, we've created a gap. So expectation is gap fill and drop, but we have not made a new low. So we are potentially looking at a peak formation low, new high, higher low, and an up day. Yeah, so that's one scenario that's going to play out today. Other scenario that's going to play out today is the peak formation high, low, lower high, lower low, lower high, down. We're going to have a down day. Yeah, this is what I mean by you cannot tell which way the market is going. I don't know. You don't know. No one knows. Even the big institutional traders, a lot of them don't know because they're only 1 out of 10 that are moving this market. Who's got the biggest bank balance today to pump in? They don't know if they have or someone else has. Apart from the guys that are all fixing it in the forums, they all know. Unfortunately, we're not in their forums, and they just got sued and fined many millions. Go and Google it. But yeah, so those are the two expectations. So all you can really do whenever you're trading anything, if you're trying to scalp intraday or you're trading longer term, you have to have a plan. What do you think market structure is going to do next? And plan for those outcomes. So if it's going to be an up day, in my case here, I'm going to get out. If it's going to be a down day, what I could do is add an additional position in here. I've already got one here, so I wouldn't. But let's say, for example, I'd got in up here. This would be an add point for an additional position. It's just planning. What do I think is going to happen? As the price action is unfolding, I'm thinking, where are we now? Right, so market structure is now looking like potentially we can go in 2 directions here. We've got a low, we've got a high, we've got a lower low, lower high, a lower low. So it looks like it's bearish, but equally this could be a higher low and we're going to go bullish. We've got no confirmation yet, have we? We're literally just chopping around with no directional bias because we haven't broken out of this opening range. That's an interesting idea. I'll try and look back on the chart and see how it usually moves. Which idea was that? This is the problem with this delay. People start talking to me in the chat and I'm like, I can't remember what I was saying at that point. Oh, entering, probably about entering. Yeah, so you can do this in a spreadsheet. If you how would you do it in a spreadsheet? If you go to investing.com and download S&P data, what's under there? Is under SPX? Yeah. So if you go to investing.com, if you want to get data, if you want to do any analysis, yeah, on strategies, if you want some decent data, go to investing.com. And you could stick up here what you want to get the data on. So I put in US 500, S&P 500, whatever it is. And then here what you can do is go to historical data. Yeah. And it gives you the open, high, low of basically every instrument. So you can get daily time frames, weekly and monthly. So if you wanted to do daily close analysis, you can get all this out into a spreadsheet. And this is how I did my ADR when I created the ADR reversal indicator. This is how I did it. I got all this data out and I calculated the average daily range of all the instruments I was interested in from the data from investing.com. And it also shows you what the change is. Yeah. So if you entered at the Asian Open, right, and you got out at the next Asian Open, tells you what you would have made. Yeah. So I'd have made 1.78 that day. I'd have made 1.14 that day. I would have lost 1.14 that day. Yeah. So worst case scenario, if you got this data out and just added up the total of all these columns, saying that you were going to go long at this time and exit at this time, you can figure out how to make money on the S&P. Obviously, if you just long this, and a lot of investment firms do this, they will go long on the S&P and they'll make 8% a year, which is its average return. Some years it will return a lot more. Some years it will make a loss.
But you can do that. If you wanted to get intraday data, you could get hourly and 4 hourly. And you could say, I want to go long at 8 a.m., which is when London starts to open. And I want to close my positions 2 hours before New York close, because obviously we quite often get a sell-off at the end of New York. So you can do that. You can get that information, stick it in a spreadsheet, and you'll be amazed how you can create an edge. But the trouble everybody has, obviously, is sticking to that edge when it starts to play out. That's the hard bit. But yeah, S&P, things like this. You look at it. When you're looking for you're building a strategy, and you're building an edge. You literally just have to look at historical data and find something that works the vast majority of the time, and that is your edge. And your edge can be as simple as hitting the buy button at one time of day and hitting the sell button at another time of day on an instrument that typically goes north. Simple. And that's really all I'm doing if you think about it with the position trading and the RSI. When it gets up here, I hit the sell button because I know 80% of the time it will come back down from there. And sometimes it goes higher and higher and higher for 4 or 5 days or sometimes longer. But eventually it does come down. And I know that because I see it happening over and over again. Let's use the 40. Yeah. When it gets down to the 40, it goes up. When it gets down to the 40, it goes up. When it gets down to the 40, sometimes it goes up, but not quite far enough. So you have to wait for the next ones. And you get in and wait for it to go up. It comes back down to the 40 and it goes up. It comes back down somewhere around here. I would have got in and here, and it goes up. It's not rocket science. It's really, really easy to backtest. This is why I use it. Doesn't repaint. And you can literally see on a piece of paper, if I started trading in October and I'd taken every time it got below the 40, I've made money. That's my edge. Don't overcomplicate it. There's too many strategies with too many things going on, which are way too complicated for 90% of people. Me included. Which is why I make everything really simple. Moving averages. That's why I love these moving averages. If it's green, buy it. Okay. Because we know that when it's green, it goes up. When it's red, there's a chance it's going to start to go down. Obviously, if you're using a stop loss. If you're not using a stop loss, you never short this when it goes red. You buy it when it goes red. This is where I was buying. Every time it gets down here, I'm buying it, not selling it. But that's just the NAS and the S&P. They're unique instruments, which is why they're traded so much. I'm just going to cover this. I don't like selling this. I hate selling these instruments. What have I got? 0.25%. I'll go with 0.25% today. I'm not getting greedy on it. There's a good chance this is going to do what I said and pull up and drop. But if it doesn't, I'd rather just not take a loss. Might as well cover and trail it. This thing's quite possibly going to come down. It's looking so bearish, but then again, when you look at something like the S&P at the minute, it's just looking like it's going sideways. It's going to chop, and we're going to end up on a flat day, a doji day. If you look at the daily, we had a doji yesterday. We're looking like we're going to do similar sort of thing today. If this pulls back up, actually this is going to just turn into a hammer, which is even more bullish, isn't it? So it's just non-directional today, unfortunately. You're talking to one of the I was talking the one on Apex without stop loss, or better, use a time stop when the market closes. Yeah. There's quite a few people. I've got a friend that I've known for probably getting on 7 years now, and we were mentored by the same guy who introduced me to this indicator. This not these moving averages. There were different moving averages, and I've known him for a while, and he trades S&P, purely trades S&P without a stop, and he's very, very successful, and he trades futures, and he's out end of day, and that's literally all he does. So I know it can be done. It's just a case of personal preference. You know, part of this job, unfortunately, is, which is why everybody system hops, is about finding what works for you. This works for me. The way that I trade works for me. It doesn't work for a lot of people. I've been through tons of courses and tons of strategies and systems that work for other people, and they don't work for me. You have to try everything, and you have to pick what works for you as a trader. And if it doesn't work for you as a trader, then you just dump it and move on to the next. There you go, I'm out of that. So that's basically what you've got to do, is just try everything, and take the bits that make sense to you. Yeah. So if you go through the boot camp and you go, God, these moving averages make total sense, take them away and then go and stick a load of other indicators on top of them. Make your own system and strategy, but take the bits that make logical sense to you. If you don't like the RSI, scrap it, replace it with something else, or get rid of it completely. If you don't want to use it because you don't think this is the right place to start selling, don't do it. But if you do love the RSI, but you hate the market reversal indicator because it gives you too many false signals, scrap the indicator, but keep the RSI. You know, just if you don't like ADR, don't use it. You know, there's lots of components that I have that work for me, but they're all telling me different things. You've seen that I do not take every ADR reversal that comes up. I don't take many. They have to be in line with what my overall directional bias is. Euro Swiss, yeah. Taking a short on the Euro Swiss because it's hit ADR to the upside. I'm short Euro, yeah. You know, I haven't looked at it because I don't care, because it's only a 0.2. Let's get out somewhere down there. Again, TP. Don't get precious with your TPs. Get out when you think you have made enough. My rule of thumb is I need 0.5% a day. Yeah, if I can make 0.5% a day, I'm making 10% a month. If I can make 10% a month, I can make a living out of this if somebody gives me a 100k account. Yeah, I don't need to make 50% profit a month like all these people out there that are selling stuff and standing in front of their Lamborghinis and their big houses promising the earth. That's not the way it works. Most professional traders are not making 50% a month. Far from it. Wouldn't that be nice? Jason, what's your take on MMC, Market Maker Codes? I've never heard of it. MMC. I'm Googling that. I can't find anything called Market Maker Codes. What is it, an indicator or... I don't know. Haven't heard of that one. Market Maker Signals. No, don't know. Always happy to have a look at stuff. I've got a pretty good scam indicator built into my brain because I've been through a lot of them. So if you have anything that you find that you'd like me to have a look at, just to give my opinion on it, I'm more than happy to do that. You know, but there's a lot of there's a lot of stuff out there that makes sense to a lot of people, but doesn't make sense to a lot of others. So buy it, look at it, try it, use it, chuck it. And unfortunately, everybody has to do a lot of that. But if the market maker codes help, then use it. Aussie dollar Swiss. Just hit ADR. The chop.
Yeah, it's not. We're just stuck at the moment. It's getting a little bit more bullish, Aussie Swiss, but not really interested. This is we have definitely got a weak Swiss franc today. There's a lot of stuff pushing against the Swissy. So we've got Euro Swiss, we've got Odd Swiss, New Zealand Swiss as well. So there's a bit of weakness on the Swissy, but that's not going to hold. But again, this is a good example. If you want a directional bias on this, short it. If you take one thing away from the indicators that I use, these moving averages, these 72 and the 24, are incredibly powerful. If not for signals when you get to them, like the reversal alerts at these levels, but also just for giving you a directional bias. If you are one of these people, and I was for a long time, that struggles with picking directional bias, a lot of people use the 200. 200 is got an awful lot of room. Yeah, if you were trading the 200 now, you'd be that far away from it. Using a couple of moving averages gives you an indication, in my opinion, of which way you should be going on the market. And if these moving averages fall in line with COT bias, that for me is more than enough for having the confidence to take a trade. And yeah, I might go into drawdown for a few days. And if I was south on this at the minute, I'd be stuck in drawdown since the 23rd of December, going nowhere. But this is why we trade multiple instruments. Some of these things are just going to go sideways and you're going to get stuck in them. So what's your take on the in market maker codes? It's a strategy. Shuya Forex is the YouTuber now. No, never heard of it. There's a lot of people, just putting their own spin on lots of stuff on the internet, and watch it, use it. If it makes sense, do it. That's all you can do. Like I say, if you watch that and it makes more sense to you than anything I say, go and do it. Try it, use it. Hopefully it works. If it doesn't work, something will click out of it, and you'll use that bit of it, and away you go. It's all you got to do. I say it's all you got to do. It takes a long time, but try it. Candlestick patterns. Just seeing this massive shooting star going in now, short it immediately. If it ends up as a massive shooting star, candlestick patterns. I spent a long time just bare naked trading candlestick patterns, naked charts, and candlestick patterns, and I did really well. And then I incorporated candlestick patterns with these moving averages, and I was like, when I see a 3-bar reversal or a hammer, and we're pulling back to the moving average, getting long with a 2-to-1 risk reward. That made me a break-even trader. Just doing that, literally price action at support and resistance. As soon as I implemented that, I became break-even, but it didn't make me profitable. So then I went off down another rabbit hole trying to find out a way to improve that, and ended up losing a load of money because I followed a load of other stupid systems which were just rehashed versions of something else. But I took away bits, and then I found this and thought, yeah, that's brilliant. Then I found something about ADR. So I did more research into ADR. I spent weeks researching ADR, doing my own analysis, getting my own raw data from investing.com, and confirming for myself that, yep, there is an edge there. So I use ADR, and I've just cobbled together everything I've learned to make this. So like I say, I have no problem with any other strategies. All strategies will work for some people. You just got to find out which bits work for you, unfortunately. I say unfortunately. It's good fun trying, but just try with tiny lots. Don't do it with big ones. Been using it for a while now with my indicator, and it really works like crazy. Okay, cool. Send me a link, Jason. If you're in the Telegram, are you in the Telegram group? If you're in the Telegram group, send me a DM with a link to it. I'll go and have a look. Something else I'm working on at the moment is, as I said yesterday, is a Renko, and I said I think today, lose track. All the days roll into one. I look at the same screen every day with the same charts on it. I become blind as to which day is which. But I'm using Renko. I'm reading up a lot about Renko at the moment. It's something I touched on years ago. and somebody asked me in the Telegram group before Christmas, does the indicator work with Renko? I haven't got a clue. Never used it with Renko. Haven't tried it. So it prompted me to go off and try and look into Renko in a bit more detail. And I couldn't find any decent MT4 or MT5 indicators that would draw Renko properly. They all seem to be linked to time, and Renko has got nothing to do with time. It's movement, it's price. It doesn't work on time. It's a completely timeless charting system. So I finally found one that worked, and I stuck the market reversal indicator on a Renko chart. My God, did that thing make a difference. The clearest signal I've ever seen in my life. So I'm developing at the moment a strategy to work with Renko and the market reversal alert indicator. And it does work. The market reverse, just to answer that question, the market reversal alert indicator does work with Renko charts. And because it takes a high and a low from a candlestick close, and the indicators, some of the indicators for Renko work as candlesticks, although they are not time based. So I have found one that does work. And the market reversal alert indicator it's like this becomes the clearest thing you've ever seen in your life. There's no wicks. There's literally blocks going up and down. And when you get an alert, it works. It's brilliant. But I have yet to fine-tune the strategy. I've got to find out the best way to come to the right brick size for each instrument. Every instrument has got a different brick size that's got to be used. Obviously, there's no time frame, so it doesn't matter. We're looking at price movement, price action. So there is no such thing as a time frame. It literally is just a case of brick size is the main thing that needs to be fine-tuned with it, which I'm working on. So yeah, I'll let you know about that as and when. But that is, I think, probably going to become my new best friend going into 2022. Again, you know, I make money trading, but I'm never not looking at systems, strategies, ideas. This market moves. This industry moves so fast. When I started trading, MT4 was the only platform out there, and I had a choice of 3 brokers. Prop firms didn't exist. There was about 50 indicators for MT4 available, custom. Yeah. You know, this people come up with stuff. Yeah, these guys that make these indicators, Bill Williams. Yeah, he didn't exist at some point. We didn't have the alligator. Yeah, we didn't have the alligator indicator because Bill Williams hadn't invented it yet. He invented the alligator indicator. Now a load of people use the alligator and variations of it. So whenever you see something new, it's always worth looking at. And you have to ask yourself the question, does this add value to the system, the strategy, or the way that I'm trading or not? If it does, and you put it on your chart and you go, oh my God, that's really, really made that simple now. I shouldn't be doing these trades. I should only be doing these ones. If it wipes out a load of loss that you've taken in the past because you didn't see this before, use it. If it doesn't, I put it on the chart and I go, that doesn't make any difference whatsoever. Get rid of it. That's what it's all about. Creating a system or a strategy it's got to have multiple parts. It's got to have condition indicators, signal indicators. You've got to have directional bias indicators. You've got to have lots of things that tell you something, and you've got to have a way to get in and out of the market. So yeah, I'd encourage everybody to go and do that. Very important. Just chatting away here because there's nothing happening in the market, is there? It's just dull as dishwater today. Glad I got out of that. But it's potentially doing what I suspected. We got all this selling pressure that came in out of this accumulation here, and it looks like it's being rejected at the moment. So if we get a break down below this low, I think we are just going to have a slow grind today. But it's not really tradable. So what I'm going to do is leave the pendings here. So this buy stop here I think is pretty safe. If we do get a rally today, what's the time? 4 o'clock. Yeah, it's going to have to be a fair old rally, isn't it? But if we do get a rally today, I'd be happy to trigger a buy there because I think we will probably just push up into this area. If we do trigger a buy and drop, then I've got my backup plan down here at strategic levels to scale in on the drop. By the time I'm in a full position on this, we'll be down at the 72, and we'll get a bounce. So that's literally all the bounce I'd need. A couple of sessions long. So I'm going to leave those in place. S&P, get rid of that sell stop. I do not want to be selling it. I do think we've got downside on the S&P. I just it's weird to see the S&P go sideways for this long. It does do it, but interestingly, it quite often does it before a pullback. So I just got this feeling we are going to be pulling back. So I've got these buy limits on the S&P as well, which I'm going to hold at the 24 and the 72s. And if we do get a much bigger push down, where's my 200 moving average gone? Yeah, it's on the daily only, isn't it? If we do get, I mean, we're not going to pull back to the 200. We just don't get to it. Very, very rarely we ever get to it. So by the time we get down to this third position here, we will be at least having an update at some point, and I'll be springing back out of that. So that's what I got planned for the moment. It's a swing type of strategy, is it? That MM's the market maker code, yeah. Cool. Send me a link. I'll have a look. Oh, you have sent me a link. I've just seen in Telegram. There you go. Way ahead of the game. Right, so let's have a quick look at what's going on with the rest of the market. I'm going to shut that NAS down for the minute. So you can see we haven't really gone anywhere. This is a flattest day I've seen for a while on the S&P. So Asian range, London poked its head out the top of Asia, pulled back into Asian midline. New York poked its head out the top of London, pulled back to Asian midline. So we're not going anywhere at the moment on the S&P. Everything else, New York session-wise, we're not going anywhere. So basically, the market is setting up for FOMC at the minute. We are just sitting, waiting for FOMC to happen. So I wouldn't be surprised if the rest of this session is just flat, as you can see on the CAD Swiss, prime example. Nothing else is really moving. Still flat there. Euro Swiss. Euro Swiss has gone in my favour. So at least that's moved in my direction, but obviously not gone very far. Euro Pound, Euro New Zealand. Euro Yen is still pushing. Euro US. Pound Odd. Nice reaction off of support there. So that's not support, it's 50% fib retracement. Other way. Let's get rid of that. But that was that high and that high there. Not particularly interesting. Pound CAD. Nothing moved. Pound Swiss. Nope. Pound Swiss is potentially taking out those highs. This is this weak Swiss franc we've got at the minute. We are accumulating and looks like we're stop hunting at the highs there. Yeah, nice big wicks. Nothing particularly interesting. Pound New Zealand. Yeah, everything's sideways. Everything's flat, pretty much. So just hang on to everything until New York. I've got 0.25% in the bank today. Not very good. Not really been anything to trade. But Aussie New Zealand I've got short. Pound Yen I've got a short on. And Euro Swiss I've got a short on. So those are the positions I've got open at the moment. I don't think you'll get anything else this afternoon. So for the rest of the day, probably go and do something else. And wait for FOMC 7 p.m. So that's in 3 hours, just under 3 hours. We will either get something catastrophic and get a big old movement, or we'll get absolutely nothing at all, and the market will obviously just go nowhere. But we won't find out, obviously, until that happens. And then tomorrow, we've got unemployment claims in the afternoon. Doesn't tend to do anything. PMI does quite often.
So we will get, usually, quite often you'll get an ADR move out of PMI in one direction or the other. So fingers crossed that pushes US dollar down tomorrow, because I'm really hoping we get further downside on the US dollar ahead of non-farm, because I've really got a feeling they're going to use non-farm to push. But then we've got CAD unemployment. So as far as tomorrow goes, ignore the Italian bank holiday. They don't do a lot of trading. We've got nothing until the afternoon on that. So FOMC this evening rather, is going to be the big one. But that may do absolutely nothing at all. So just keep your eyes on your positions. Okay, so that's it for today. Not a lot happens this afternoon, unfortunately. But if you've got anything you want me to look at or discuss, obviously send me a DM in the Telegram group. If you enjoyed the video, give it a thumbs up. It really helps the channel, apparently. I don't know. Who knows how these algorithms work? Yeah, so I'll be back tomorrow, 8:30. We'll do an analysis of what happened with FOMC, if anything at all, see if there's anything new setting up. But other than that, I'm going to call it a day there. You've seen the positions I've got in there. I will just be scaling into those as necessary if we do get movement this afternoon. All right. So have a good afternoon, everybody. If you need anything, let me know. Come into the Telegram group anytime you like. And I will see you guys hopefully 8:30 tomorrow morning.